Welcome back, everyone, to the Permeable Challenge slash weekly update, turning it into more of a weekly update type thing for week 25. Now, you're not crazy. There was no week 24. I was going back, organizing a few things, and kind of realized that I did week 20 twice, so figured this is a good opportunity to fix it. So here we go, week 25. Okay, so last week I suggested that it might be beneficial to wait before adding to the Leogold position. Now, this past week, Leogold went down, gold went down. Did I know gold was going to go down? No. The equities seemed to think it was, and I didn't fight them. Now, the equities, the gold, everything, charts don't look great. It did pull back to a spot where it could be trying to reverse. It did stop going down at 1270 gold. Could go back up. The one thing is, I believe that the dollar is looking like it wants to go higher, the US dollar. So, will that be a headwind for gold? Probably. Will that be a headwind for gold in other currencies? Maybe. So, it kind of depends. That being said, if you look at Leogold, if the price of gold falls $100, then Leogold would be trading at 5.5 times cash flow, approximately. And if it goes back down to where it looks like it wants to go to, where it was in November, well, that last time it was down there, the chairman stepped in and bought 1 million shares. So, will he do that again? Who knows? It's something to watch for if it goes back down to that range, which at this point it looks like it wants to. Leogold, that is. So, we'll see how that goes. Also, Equinox, another week late. Just mentioning, they still haven't opened the Arizona mine. So, yeah, we'll see if they can ever figure that out. Okay, so I'm sure many of you are at this channel because I talk about uranium often. That being said, you probably seen me add some or talk about Lucara and say I like diamonds. Well, why do I like diamonds? You don't really need to be that optimistic in terms of demand going forwards to look at the diamond supply demand situation and be like, well, that looks interesting. If you're optimistic about diamond demand going forward, then over the next 5 years, where there's little to zero diamond supply coming online in terms of natural diamonds, well, over that period, you could rack up a deficit of about 70% of the current demand for a year per yearly demand. If you're pessimistic, it's only about 20%. But that is notable when you look at a sector that the sector's struggling. There's very little exploration, very little money in the sector, and the stocks are hurt. Now, does that mean that the stocks will do well? No. Maybe the artificial diamonds will take over. That is possible. But I think it's a sector that definitely has been struggling for a while. And I think that that is interesting. And I think that over the next few years, we could see a turn. Okay, so I was looking at the stocks that were in this portfolio, and I realized that we are massively underweight in the African higher cost production. Now, that being said, do we need that type of thing in the portfolio? No, but I just figured this was an opportunity to talk about the point of something like that. If the cycle goes quickly, then this type of thing could be one of the better performers, the ready production that's able to use the opportunity of the higher cost in order to go into production and get a big cash flow. And I've said multiple times on the channel that I really like Namibia as a location. That is where Bannerman is located. Now, they're pretty ready. their higher cost, so they do need more of a run up in order to be potentially profitable. That being said, so I figured we'll add them at these prices and we'll probably do well. The time is passing for we're not necessarily done with the possibility of having a tame cycle, but as the days pass, we are approaching that point. And that another thing to anyone who is watching this channel that has no exposure to uranium or has very limited exposure to uranium and is mainly interested in other commodities. I highly, highly suggest that you take a very close look for yourself at the uranium sector very closely and keep in mind the time that it would take for supply to come online, and also keep in mind the the inelasticity of demand. I honestly believe that you should take a very close look at that, and I think you'll probably likely thank yourself, maybe even thank me for suggesting that in a few years. So it appears like my intuition for last week might have been right. We did drop a few percent on the week, but in the end, well, the end, let's say at this date in 2021, I don't think a few percent here or there will matter all too much. I believe we are putting together a portfolio, we're adding to it that we're going to look back and say, wow, how could things have stayed like that for that long and nothing happened, nothing happened, nothing happened? But obviously, we'll see that in a while. Again, this is a long-term game, and yeah, but here's this week. Okay, so a week ago, I first floated the idea of possibly doing some type of research, in-depth research report on some stocks. Now, that's not 100% complete yet. However, I believe that I'm going to do something of that sort, and I will put the link in tomorrow's video, which will be about uranium. So I'm sure a bunch of you will have interest in watching that video, whether you're interested in the report or not. So I will put a link in the video, and those of you who contacted me, I will explain the process, and I hope that some of you find it interesting. And yeah, that's it for today. So thanks to those of you who will be reading it and to those of you who've watched this video. And until next time, have a great day. As always, everyone, please do your own research before making any investment decisions. This channel shall not be liable for any losses incurred from investment decisions made as a result of information obtained on this channel. Good luck with your investments. I'll catch you next time.